Hello, ladies and gentlemen. Welcome to your Bitcoin show tonight. This is the 22nd of January, 2020. And welcome to the show. Glad to have you guys here. Now, I'm going to tell you guys, we are in a turning point in history right now. I know a lot of people out there, they can't see it. That's because they're so busy. And the reason why they're so busy is the elites of the world are they're squeezing the middle class. And they don't understand why, but they're working harder than they've ever worked before. But yet every month they're going behind a little bit. Like they're getting a little bit more money charged on their credit card, or their bank account doesn't have quite as much money in it as it used to. And they're getting maybe a pay raise, but it seems like prices are going up faster than the pay raise doesn't quite cover it, especially things like uh, the bills for health care and things like that. It's just going up too fast, in price. And we're coming up to a point, it's almost like a road leading to a fork in the road where you can go this way or you can go that way. That's what the whole of humanity is like right now. It's heading like toward this fork in the road where something big is going to happen. Everybody out there can feel it. You can feel it inside that something big's going to happen, you know? And I mean, there's all kinds of stuff happening in the world. I mean, big things like there's a virus out there right now, and we have a global market where the Fed is on. Basically, they've went into uh, uh, a panic. The Fed is actually panicking right now. They're trying to cover something that they can't cover. This is the repo market. This is at the core of the financial system, and they have to keep pushing the stock market up higher and higher and higher, because if it falls, it'll fall too far, and everything is just kind of coming unglued right now. But most of the general public out there don't notice anything. They don't notice anything because they're working so hard that their mind is on what they're doing. They're like, I got to get out there and do this job or this thing, and they can't focus on what's actually happening in the world. They don't even know. A lot of people out there, they might turn the news on and watch a few minutes of it, and a lot of people don't even know what's going on. They haven't a clue. Anyway, what's going on with cryptocurrency right now is the same thing. We're at an inflection point with Bitcoin right now. Just a slight move to the upside could bring energy into it, or a move to the downside could draw energy away from it. And it's right at that inflection point. So let's get the charts on right. Give me a second here. Let's turn the charts on right here and take a look at what Bitcoin's doing tonight. It's been fluctuating for the last, I guess, at least 24 hours, right around $240 billion market cap with a 65.7% Bitcoin dominance. What we're looking at is a price of 86.69, for Bitcoin itself. But this has been going along really sideways, really still. Now I'm going to tell you about the cryptocurrency markets. They're not a market that go along sideways with no volatility. Cryptocurrencies aren't like that. They're either moving down or they're moving up. They've been going sideways for a while now, and it's almost getting a little bit comical and a little bit boring, because all of these pundits out there who say, oh, you can never invest in cryptocurrencies. It's too volatile. It drops $1,000 today and it's up 1,000. No, it's been going along sideways. It's been probably the most stable asset out there right now for the last week or a few weeks. It's been really, it's been trotting back over these same price ranges from a few months ago. 86.69. It's like watching a clock that stopped. A stopwatch is right twice a day. By the way, a lot of people, it's absolutely correct on time twice a day. So anyway, listen, guys, is Europe driving adoption for cryptocurrencies? This is the article we got here. Cryptocurrency in Europe is becoming bullish. Europe thinks crypto will become mainstream in the next 5 years, according to a poll by Bitflyer that sampled the thoughts and feelings of 10,000 participants across 10 different countries. You know what? That's quite a substantial polling. 10,000 different participants across 10 different countries. That would give you a good wide range of the viewpoints of Europeans. It says Europe has revealed a high percentage of Europeans who claim that cryptocurrencies are not just a phase. So they believe in it. Europeans believe in it. You know, it says according to the details of Bitflyer Google survey, so it's a Google survey, just over 60% of Europeans think that cryptocurrencies will still exist by 2029. Well, of course they're going to still exist. But the big question mark is what percentage of the global economic system will the cryptocurrencies have in 2029? What percentage? Will the fiat currency still be here? Will the fiat currency still exist in 2029? Maybe they will, but maybe they will be hyperinflated, or who knows? I mean, it's just one of these things where they keep pumping out this money, this funny money, the central banks, and they've done that in Japan for a long time now, and Japan's currency did not hyperinflate. But Japan is a special circumstance. You have to understand that the Japanese have an awful lot of savings, private savings and stuff, and they also have a very vibrant economy. They have big companies like Toyota, Mitsubishi, Nissan, and all these different companies in Japan. Major auto producer, and also an awful lot of other things that they produce, they manufacture, a strong manufacturing base. Whereas, this is one of the reasons why they've been able to print and print and print, the Bank of Japan, and they haven't went into hyperinflation. In fact, the Japanese currency, the yen, has actually become a safe haven asset, if you can believe that. The amount of yen that they've printed, it's absolutely amazing. Back to the article again, because I'm straying a little bit here. 10 countries were involved in the polling: France, United Kingdom, Belgium, Germany, Denmark, Spain, Poland, Holland, and Italy and Norway. They showed high levels of confidence in cryptocurrencies. 73% believe that digital currencies will still be around in a decade's time. That's very interesting, Now, my personal opinion is I think that the real driver for cryptocurrencies is going to be the demise of the U.S. dollar. And why the U.S. dollar is going to go down is one simple reason. I'm going to give it to you guys right now what the reason is because it's a world reserve currency. They have to keep printing a supply of them for the world. And what's been holding it up and propping it up and keeping the dollar powerful for the longest time now is what's called the petrodollar, because it's used to buy oil. But these countries like Iran, Russia, China, they're undermining that petrodollar so that the dollar doesn't need to be used to trade in oil. They're trading in other things. They're trading in futures. They opened up futures contracts not that long ago. China did, where they trade in yuan for oil, or they trade for gold. Russia and China and them, they can trade for oil. They don't need dollars to trade for oil anymore. And so they're undermining the petrodollar. And that's the core support for the dollar trade, And once you haul that core support away, then America starts printing too many dollars to supply the world with dollars, and after a while, those dollars could start coming back home in massive amounts, leading to more and more inflation. In fact, I think we're already starting to see it, because inflation is starting to uptick. Once inflation starts to run out of control, it's game over. This is going to be the driver behind cryptocurrencies. This is what's going to drive the adoption. In fact, this is what's driven it all along. Bitcoin would still be 20 cents a piece. Yeah, I think they'd still be here. I don't think Bitcoin would have died, even if it was 20 cents a piece, because it's such a new, novel invention. It's such a new, wonderful technology. I think it would have still been here. But if they had managed the fiat currencies correctly, in other words, limited the supply that they printed, keep interest rates high, so that people can earn on their savings and things like that, then the cryptocurrencies wouldn't have boomed in the first place. They would have stayed as an undercurrent. Probably Bitcoin would maybe be 50 cents each, but they'd still be here. It's just that the price wouldn't be what it is right now. So what's driven that price up to where it is right now is the demise of the fiat currencies. And I think this demise is going to continue. And as it continues and as it gets worse, that's when we're going to see a boom in the cryptocurrencies as a way out. When people see their savings being eroded, and they look and they see Bitcoin's up 10% this year, that's going to lead to more people jumping on board. And when that happens, it's a self-feeding cycle, self-perpetuating cycle. So evidently the Europeans are really on for cryptocurrencies, but I think America could really get on for it too as the dollar starts to inflate. And we're going to see this inflation. It's going to come because America has to keep printing more and more. They can't let the stock market collapse. We got this slowing in the world economy that's only going to get worse now that fear's out there. People are getting frightened to travel and stuff like that. This is going to have an effect upon companies that transportation companies and stuff, and they're not going to need as much oil or gas, and the gas and oil price is going to start to drop off, which is already happening. In the next couple weeks, we could see the oil price drop $2, $3, $4 per barrel, right? And I'm not talking per gallon. I'm not talking at the pump. I'm talking per barrel price. We could see a drop of $3, $4, And this is very deflationary. We could see that affect the stock market very negatively. Of course, the Fed's going to have to come in to support the market. They can't let everything fall, and this means printing even more money, so that's where we're going with it all. Listen, thank you guys for listening to this show. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the next episode. Bye-bye, guys.